again to everyone. Welcome on board on our Near space powered by Near UA. I think like everyone enjoyed our happy hours and nice weather today, so we can enjoy coffee upstairs as well. It's time to move on and start with our speakers. I'm happy to present you our first speaker, Alex Shevchenko, CEO of Aurora Labs, with the talk, The Evolution of Aurora Ecosystem and Infrastructure. Welcome, Alex.
Can you hear me now? This is better now? Cool. Hello everybody, welcome to Aurora Day. This is a day for Aurora community, and kudos to all of you for coming here. Thank you. I'm doing today a talk about how Aurora was evolving and what was happening inside of Aurora over the past year. It is super funny to remember what was there 1 year ago. It was the first, EthCC was the first conference where Aurora as a brand was coming to. And back then nobody knew anything about us. We were trying to get in touch with some people. I remember I was trying to approach Stani and talk about our deployment on Aurora. And like he was looking at us like oh, you guys, cool, but we don't know you. I was trying to connect with Etherscan and convincing them to integrate with Aurora, and again they were okay, like we are going to put you in the list because so many people are doing different things. And now we are here at this moment in time, just 1 year after the launch of Aurora, 1 year of the insane development of the ecosystem, and this is a good time for us to review what actually happened. And when I was doing this presentation, I was pretty damn amazed about all of the stuff that you, Aurora community, already did. So in case there is somebody who is coming here just to understand what Aurora is, here is one slide for you, super simple. Aurora is the solution that allows the execution of Ethereum smart contracts on top of Near. And it can be viewed as an L2 to Ethereum. It works as a smart contract on top of Near blockchain, and it combines the best of two worlds. From Ethereum, we are taking the runtime and all of the tooling that is developed. From the Near ecosystem, we are taking scalability, performance, low transaction fees, and so on. And we're combining these two things into one, which is called Aurora. We do have a familiar things available to everybody in the Aurora ecosystem. We have a Web3 compatible RPC, so all of the Ethereum tools can connect to it directly, including MetaMasks and other different wallets, Coinbase wallet if somebody uses it, different wallet connects wallets, and then also Remix, Truffle, Hardhat, everything that is there in the Ethereum ecosystem. Since Web3 JSON RPC is a standard, now all of these things are capable to be connected to Aurora. Our base token or the base token of Aurora, or the token in which users are paying fees, or sometimes paying fees, we are going to touch base on this a little bit later, is ETH. We are not compromising the full compatibility with Ethereum blockchain. We're not pushing users to buy some strange new token or figure out the place where to get it. You just need to have ETH, bridge it to Aurora, and you are capable of sending the transactions to Aurora. We launched just a couple of months ago a new product which is called Aurora Plus, and this is our solution to elevate the user experience. It brings free transactions for the users, constant free transactions over time. You have free transactions this month, you have free transactions next month, and so on. And last but not least on this slide is that we are builders and maintainers of the Rainbow Bridge, the bridge in between Ethereum, Near, and Aurora ecosystems. All of these things, this is something that we are doing, and this is, a very, very quick overview of Aurora. But many of these things have been developed over the past year, so we are going to go a little bit inside of it. Now, if there is one thought that I would want you to leave from after this talk and after everything that you're going to hear here, this is it. I do believe that Aurora is the best L2 solution in the market. And this is not just kind of one thought. I'm going to prove it to you over the course of the next slides. Let's take a closer look at Rainbow Bridge and its development, right? So Rainbow Bridge is trustless and permissionless bridge. There are literally no other trustless and permissionless bridges that are working with Ethereum at the moment. This would be enough for the tech guys, but let's continue with some additional stats. So it is the top 3 largest bridge with Ethereum at the moment. So the amount of TVL that is bridged from Ethereum over the Rainbow Bridge is like its number 3, literally. It is constantly referred to as the best UX bridge, which is kind of cool, which means that the users are appreciating this. It was not hacked, and that's the best thing about it, I believe. And one of the reasons why it happened is that because we do have a working bug bounty program, and we actually paid out a second biggest bug bounty in the world, a 6 million bug bounty to one of the hackers who actually submitted it through Immunify. And the reason why he submitted it is just because, well, we said that we are going to pay you 6 million, right? I'm laughing at all of these projects who are creating their bug bounties with like 10K or 50K, especially for the kind of critical vulnerabilities on the protocol level, right? You cannot do it in case you're operating with hundreds of millions or with billions of user funds. You must protect your users. And moreover, many systems in Rainbow Bridge are working automatically to resist attacks. And one of these attacks was happening just 3 months ago, or like on the 1st of May. Somebody was trying to attack our bridge, and then our system just prevented the hack of 1.5 billion automatically without even us understanding what was happening. So we needed to figure out what was happening there a little bit after it. All of these things are, from my point of view, they're saying that, well, Rainbow Bridge is the best bridge, and this is only one part of the solution. But let's go into the next things that are developed over the course of the previous year. And this is Aurora Plus. So Aurora Plus itself is a user dashboard that gives the next generation of user experience when working with blockchains. And in Aurora, we do believe that this is something that is absolutely needed to get to the point when we can say that there is a mass adoption for the users. Web 2 people are not understanding Web 3, and in case we're not going to change the user experience of stuck transactions, the need of constantly checking what is the gas price, resending the transactions, checking the nonsense and all of the stuff, in case we are not going to change it, we are not going to get to the mass adoption. So Aurora Plus implements familiar things for Web 2 users. It has a freemium model. You register with Aurora Plus, in 1 minute you are having 50 free transactions on Aurora per month. And every month these free transactions are there for you. You can use them. And on top of this, we would like to add, and that's why it is in kind of the red color, we would like to implement subscriptions. We would like to give an ability for a user to connect his banking card and have a credit on the transactions. So the user is never thinking about the base token of the blockchain. We do believe that this approach is the only possible approach in order to achieve mass adoption for the blockchains. But Aurora Plus has a heavy part underneath it, and this is Aurora RPC. So according to our data, since we're working with lots of RPC providers, including Pocket Network, Infura, Alchemy, our RPC infrastructure developed internally which is available to all of the Aurora ecosystem, is at least 20 times more efficient than any other RPC out there in the market. And I'm talking about right now a specialized RPC companies that are building their businesses around it. I'm not talking about kind of L1s that are building some kind of RPC infrastructure. This is a great tool. It is unseen, but this is something that is going to support that user growth, and you will see more and more advances around RPC in the following months. And in case you have not seen it, and I believe this is one of the biggest achievements for Aurora Plus, we have done an absolutely great product rollout. So we are also moving not only in the technical direction, but we are kind of doing our first steps in the marketing. And our own Tim Cook was presenting it, so in case you have not seen that 20-minute video, encourage everybody, check out this QR code and take a look at the product announcement there. And yeah, this has happened because of my colleagues. This is all of these products that I'm talking about, they have been built internally inside of Aurora Labs. And 1 year ago, we were just 13 people that have spun out from NEAR and organized our own company, and we were just pretty afraid of all of the things that are happening. But we continued to build, and now we are 65. So it is a 5x growth over 1 year period for a company. Thanks. But something wrong with the screen. Thanks. But this is not even close to all of the achievements of the Aurora ecosystem. And I'm just going to show you one simple slide that you can understand that it is like everything that we do is just kind of our own small contribution to what the community is doing. Here it is. This is the tree of all of the different projects that are already working on Aurora or are going to launch. Each apple on the tree is already a launched project. Some kind of apples that are kind of green, they are still in the development and they are going to be launched soon. So Aurora Plus, Rainbow Bridge, well, these are just 2 apples. And all of the rest this is something that was built by you, by the Aurora community. And from my point of view, this is just amazing. We actually have more than 150 applications live on Aurora today within 1 year time frame. So I'm going to just to list some of the community achievements. DeFi ecosystem on Aurora was booming before the market crash, and I do believe that is going to continue its growth. It was topping up more than 2.5 billion in TVL. It was entering top 10 according to DeFi Llama of the ecosystems. We are all of the applications in Aurora right now having more than 2.5 million transactions a week, which is something like 1/3 of the lot of Ethereum. So approximately 1/3 of all of the transactions on Ethereum right now are happening on Aurora, literally. Etherscan, Infura, MetaMask Institutional, VGraph, Covalent, Curve, Gnosis, Xerion, and many other blue chip projects from the Ethereum ecosystem, they feel on Aurora like home. And they already integrated, and the amount of this project continues to grow. Expect additional announcements about the blue chips launching on Aurora. One of our projects, both of our biggest lending solution, Bastion and Aurigami, are having 0 bad debt And there are not that much of lending protocols that are out there across all of the blockchains. Moonflower Farmers, the game that is a fork of a Sunflower Farmers, a famous Sunflower Farmers that break Polygon. They launched on Aurora at the moment when all of the transactions on Aurora were free. So people were able to transact for free on Aurora and play that game, that poorly designed game that creates insane load on the network. Now this game didn't break Aurora, which means that the combination of Aurora, the RPC, and also the Near protocol as a basement is super, super robust. Rev Finance, which is a near-native AMM solution, is now doing the swaps on Aurora through Tree Solaris, which is Aurora's biggest AMM at the moment. Aurobots by Lawmaking, they are one of the most traded and most desired NFT collection out there. And there are lots of activities around fundraising in the Aurora ecosystem, and even here I've already seen some of the VCs that are capable to help you in case you are building projects, and we also obviously are willing to help our ecosystem to connect with VCs. And there are multiple teams that are at the moment at the stage of raising their rounds. And the last thing with which I would like to end is that just recently Aurora launched its community grants program, and everyone who is willing to grow the community, everyone who has the ideas about creating the content, doing hackathons, doing kind of podcasts, you are all welcome just to follow these 3 simple steps and be able to get funding for your ideas. So encourage everybody who is willing to do this, go there and just try it out. And I would like to end with a simple message, and then pass to the people who are actually building on top of Aurora, so they can present you more in detail of what is happening. It is 1 year of Aurora existence. Our systems are nominal. We're not hacked. We're continuing our development. And stay tuned, and please do not be super upset about the current crypto situation. We are going to survive. We are going to move through these times, and everything will be just great. Thanks everybody for participating in the Aurora community.
Thank you. Thank you so much, Alex, for your amazing presentation. And we have time for some questions, so probably. If you have questions, just raise your hand and I come with micro. No questions so far? Okay, that's great. I think next speakers will continue your story. Thank you so much, Alex. And I'm glad to present you our next speaker, Maxim Senkevich, co-founder of Atomic Green, with the talk, The Future of Decentralized Finance. Yes, we just need 1 minute to connect everything, and we will proceed. And I just want to remind you that we have live translation upstairs, so you can enjoy some coffee on the terrace if you want, and you will not lose any presentation. Okay, so Maxim Senkevich, co-founder of Atomic Green. The stage is all yours. Welcome.
Hello to everybody. Thanks for attending, and first thanks to Aurora for inviting us to Paris and for this very nice venue. Otherwise, yesterday was very hot. Today is better, so I hope everybody feeling good today. The topic of my talk today will be the DeFi and the future of DeFi, how we see it in Atomic Green. But before we will speak about the future, we need to discuss the actual state of DeFi, how it is now. What are the first words that are coming to the people's minds when they hear the word DeFi? Apart from decentralized, 24/7 accessible, not controlled by anybody, couldn't be blocked, I think the three words that describe DeFi now could be DEXs, lending, and farming. This is how people, the majority of people, probably they understand the DeFi now. In our point of view, this represents DeFi in a very embryonic state, but it's just a baby just born, but it has a lot of room to grow and a lot of time to pass until it develops. But not to be unfounded about this, I wanted to look through several charts comparing the traditional financial markets to the crypto markets, and then we'll be able to move to the future of the DeFi based on this. If you look on this chart, in the traditional financial system, derivatives, they represent the majority part of all the volumes, with more than $600 trillion in the total value of the derivatives only. And you see that crypto is just at the end. And derivatives could be the top or just the basis of all the traditional financial systems. If we are diving deeper to the market size ratios, you can see that this is like the real size sometimes. The world derivative market is very big, and this is the major system, the major financial system, where the derivatives, they form the basis of all the markets. And the DeFi, it's somewhere there at the end with a total DeFi value of 59 billion, probably now it's a bit bigger. And the derivative markets in DeFi, it's only $1.3, $1.5 billion. It's very small, very tiny. And at this point, we told to us, whoa, there is a big room to grow comparing to the traditional financial systems. So, diving deeper to the derivatives and the crypto, we wanted to share the overall volumes of the derivative trading on centralized exchanges, crypto exchanges, which is 290 billion daily. And the spot market trading on DEXs is only 120 billion. So as you can see, in the centralized crypto market, this ratio is not so bad comparing to the traditional financial market. It's bigger, the derivatives. But if we go to the decentralized exchanges, it's vice versa. And the derivatives trading on the DEXs are only 1.3, 1.5 billion daily, while the spot trading is almost twice bigger. This is the second time we told to us, whoa, there is a room to grow in the decentralized derivatives. But before we start about the future, what we're missing in DeFi comparing to the traditional financial systems? Sometimes they are represented already, but they are very tiny and very rudimentary and have to be developed. These are insurances, interest swaps. It's a very difficult theme in the financial world traditional system, but it could be translated to the crypto as well and to the derivatives. Then bonds. Everyone know what is bonds? And somehow there exist some types of bonds now in crypto. And forwards. This is more technical thing about the options forward, but all of these form part of derivatives. So probably you understood that the future of DeFi, in our point of view, is building the very basics fundamentals as derivatives, because derivatives should be at the very fundamental and form all what is building up and front for the decentralized finance. But why derivatives are so important? Because it's the essential things to the traditional markets, and it's essential things to the crypto economy, because their functionality extends far beyond the unique investment portfolio. Derivatives were existed to hedge the risks of the professional players like traders, banks, investment firms, because financial systems are built up to financial markets, and financial markets are all about the risks. And professional players, they want to hedge their risks, they want to protect themselves from some events, unpredictable events such as high price volatility. And this is where derivatives, they're coming into the game with the futures and options. So in our point of view, if we will develop and will have very well developed the derivative system, the DeFi will grow exponentially together with the derivatives. This is the thing that actually derivatives are for. It's hedging and speculations. But for now, in DeFi, we see only speculations, but there is almost no hedging. People don't use it for hedging. But moreover, speaking about the crypto derivatives, there are a few very inherent advantages of them comparing to the traditional financial markets. And we think that this will float some derivatives to the crypto derivatives from the traditional markets. They are easily accessible. It means that literally everybody in the world that have a device, that have a connection to the internet and the Web3 wallet installed in it, they can access crypto derivative and the DeFi as it is. And the second one is that they're easily created. In traditional finance, to create a derivative and to list it, you need a lot of money, sometimes millions of dollars, a lot of people to create and list it, and a lot of time. Vice versa, in DeFi, it can be done by one person, very cheap and very fast, sometimes in a matter of minutes or hours for somebody. Another big block for the DeFi in the future is the debt market. Actually, we have some players in the DeFi and the debt market like Aave Compound or MakeADAO. There you put the collateral and you can take a loan. And of course, there are some projects that take like collateral NFTs now, but they're also at the very beginning. We truly believe that in future, projects and DAOs should have the possibility to emit their own bonds. But to reach to this point, we need to create an infrastructure and really evaluate the underlying risks and also develop the automated smart contracts for their management. So this is the second thing that will be in the DeFi in the future. Also, another thing is the leverage market. It's not actually the derivative, but it's a big block because it uses not the synthetic order books, but the liquid order books. There are a lot of projects now in the DeFi, not a lot, a few of them with the leverage trading that tend to be decentralized, but actually they're mimicking to be decentralized and they're centralized because once you need to deposit assets to any account within the ecosystem, it's already not decentralization. You don't control your funds. In our point of view, and we truly believe that the leverage trading in DeFi should also be totally decentralized. That the user controls his funds all the time, and he only passes the management of his asset to the smart contract, but not passes it to the account within the ecosystem. Another thing is using the liquid book, order book. For example, like UniV3 or the project that will be launching on Aurora that is called Izumi. And the project that represents this type of product is Atomic Green. I'll speak a bit about it later. We have in Atomic Green the lending protocol, the leverage, and the IMM that will be built in the future versions. But it's like a long-term things. How it works. First of all, Atomic Green is the project for the leverage trading on DEXs in the EVM-like chains through the liquidity pools of Izumi and UniV3. So it consists of two parts. The first one is the lending protocol. So it's pretty simple. Everybody knows what it is. It's to lend money and to borrow money. The second part is much more complete, and this is where the magic happens. So this is the controller. For example, when the user wants to open the position short or long, controller borrows the fund from the lending pool. After that, depending on the situation, whether he goes short or long, it sells or buys the underlying assets and positions the liquidity to the UniV3 pool or the Izumi pool in the range a bit higher than the take profit or stop loss of the user. That's why we have the concentrated liquidity on the protocol. And apart from that, I forgot to say that lending gives like 40% APR in stablecoins because of this. Once any of the actions like stop loss, take profit, or market close is triggered, the controller says the underlying assets, repays the lending pool, and then it distributes the P&L and the fee among the lender, the trader, and the platform as it is. When it's liquidation, it's a bit different. It sells the collateral of the person, and it repays the lending and distributes the fees as well. Making it everything, to sum it up, we truly believe that DeFi, let's call it 2.0, is much nearer than we think. And with the mutual collaboration of all the projects that exist in this field will bring us to the very bright and really prospecting future. Thank you.
Thank you so much. Thank you so much, Maxim. Okay, we have our next speaker. So, do you have any questions to Maxim? Just raise your hand and I'll assist you with the micro. No questions so far. Thank you so much, Maxim.
Thank you.
Thank you for your
Thank
presentation.
you. Have a nice day.
And before we move on to our next speaker, I just wanted to remind you that we have a bunch of activities right upstairs. You can get your airdrop near tokens to your wallet. We have a quiz, we have a puzzles. You can just check out it upstairs. We still have live translation upstairs, so you can go upstairs, enjoy some coffee, and you will not miss any presentation. I think we're ready to go, and I'm happy to present you our third speaker, Eyang, co-founder of Aurigami, with the talk, Aurigami, our Aurora story. The stage is all yours.
What you want, I gotta know. What you want.
So good afternoon, everyone. Quick introduction of myself. I'm EY, founder of Aurigami. Whoa, okay, that's a very good introduction. Okay, so thank you for joining me here today. We'll be sharing more about Aurigami's exciting journey on Aurora so far, and also sharing some of the insights that we have learned throughout. So do allow me to introduce Aurigami to those who are unfamiliar with us. We are a non-custodial money market on Aurora, and our main product offering is to allow users to deposit to earn yield, and of course to borrow by over-collateralizing your assets. So as the first money market on Aurora, our vision is actually to lay the foundation for DeFi innovation to happen by aggregating liquidity. So I'd like to share some of the high-level numbers. Since launching, we have averaged 280 million liquidity. We have actually reached a peak of close to $1 billion back in May. In terms of liquidation that happens on our platform, we had 3 million since launching as well, indicating a strong liquidity engine. Currently, we have 8,000 total active users, and this number, of course, is growing every week. And we have listed 9 of the largest assets on Aurora, and we'll be looking to list more tokens in the near future. So our journey on Aurora really started back end of last year, in November, where we found out about this amazing opportunity to build a money market on Aurora, right? So the team immediately jumped on this for 2 main reasons. First, we are very convinced with the technical superiority of Aurora, whereby developers like us gets to benefit from the faster settlement on the near blockchain, and also get full access to all the EVM toolings, liquidity in Ethereum through the native Rainbow Bridge. And secondly, we are also quite convinced that back then, Aurora will be able to attract a lot of successful VCs to come in. Now this is very important, because for developers like us, we are attracted and hugely incentivized by ecosystem grants. And of course, by having more good innovative projects on Aurora, we'll be able to attract more users and liquidity into the ecosystem, and thereby kicking off this flywheel of growth. As one of the early builders on Aurora, we benefited tremendously from the support given to us by Proximity Labs and the Aurora team. So our next milestone was in February, where we were quite fortunate to ride on the excitement generated by the ecosystem, and we managed to raise a 9.5 million round, which was co-led by Dragonfly Capital and Polychain Capital. Straight after that, we were successful to be able to be the first money market launched on Aurora. May was quite an exciting month for us, where we collaborated with 3 of the top tiers launchpads, KuCoin, Bybit, and Impossible Finance, where we raised a further 2.5 million in an IEO round. Shortly after that, we launched our paper mill and pulp, which I'll discuss in more detail later, as it's critical to our liquidity mining program. And most recently, we were listed as one of the healthiest lending protocol on RiskDAO's Bad Debt dashboard, comparing all of the leading money markets out there in DeFi. So we're very proud to have 0 bad debt and 0 insolvent accounts despite the recent market volatility. So this is strong evidence of the resilience and robustness of our liquidation engine, and as a result of a very good risk management, or prudent risk management from the team. The first milestone that I'd like to talk a bit more is about our product launch in March, right? So the very first challenge that we faced was how can we be quick and fast enough to seize the first mover advantage and be the first money market on Aurora. And through this, we had this amazing opportunity to work very closely with the Aurora dev team to optimize the Aurora engine, culminating in the release of engine 2.4.0, where we doubled the gas efficiency. So a short recap for everyone here on the basics of the transactions, right? So as we all know, Aurora Engine is a smart contract layer on top of Near blockchain. It also has a full EVM interpreter, allowing us to execute Ethereum transactions. So when a signed Ethereum transaction is sent to an Aurora RPC, what happens is it's wrapped into a Near blockchain. So by logic, all transactions on Aurora must follow the same logic on Near blockchain. So this gives rise to a very interesting gas challenge, especially for developers like us. How do we pack more and more EVM work into the same single Near transaction? So what our team has done is to really understand how the transcompiler, which is the Sputnik VM, works, and how the EVM gas correlates with the Near gas. So we deployed hundreds of contracts, we meticulously profiled and studied them, and what we found is that there are certain irregularities in the cost of reading variable from storage. More specifically, when we read a variable, what happens is the Sputnik VM may translate that into a triple or quadruple read, thereby wasting precious gas resource. So by solving these issues, and of course with several other improvements, we managed to bring down the gas costs significantly, thereby allowing future developers to deploy more complex and more complicated contracts. So our first tip to all the builders on Aurora is to pay attention and be very conscious about gas consumption, and to really understand the interactions between Aurora and Near. The second milestone I'd like to discuss more is, of course, our Ply token launch. This was back in May. From the very early on, we knew that we had to attract cross-chain liquidity onto Aurora, and also to play our part to encourage and to attract users and investors into the ecosystem. So what we have done, as I mentioned just now, is we have leveraged on these top three launch pads. And this gave us the maximum outreach as we were able to tap into their communities and get them to come on board to the ecosystem. So all three launch pads experienced oversubscription of Ply, and I think that is a great indication of the interest that's shown to both Aurigami and by extension to the Aurora and Near ecosystem. Shortly after that, our Ply token is also launched on Huobi and Trisolaris using Rift Finance liquidity infrastructure in partnership with the Near Foundation. So over here, I think just to share, for us, I think we can, for the builders out there, consider deploying your native tokens on Ethereum and then bridge them over to Near and Aurora. For us, we found that that's the most effective way of making sure that your native token is available cross-chain. So it's something to consider. Next, I'd like to share something that's unique to Aurigami, which is the paper mill. So as all of you know, liquidity mining is a critical part of bootstrapping for all DeFi projects. But more often than not, people or the early liquidity miners will leave and redeploy their capital elsewhere when there's newer projects coming up. So this is our attempt to solve this issue. So what is the paper mill? The paper mill is essentially our liquidity mining program, but with a twist. So rather than just giving out Ply tokens, which is our native governance token, we also give out Pulp token, a liquid lock token as liquidity mining rewards. Allow me to explain more about what Pulp is. So it represents Ply, it represents lock Ply, and it's able to be redeemed as one-to-one to Ply at a later date. On the other hand, it is also an ERC20 token, which means that it's fully tradable and transferable. Therefore, it's a lock token that's liquid. That's why we coined it a liquid lock token. So by introducing Pulp, we're able to give rise to quite a few interesting use cases. Firstly, it allows users or investors that wants to long Ply an opportunity to buy Pulp at a discount in the market, right? And secondly, by introducing gamification into the paper mill, we are able to incentivize our liquidity miners to delay claiming of their rewards, thereby prolonging the release of Ply into the circulating supply and reducing the sell pressure. So we are happy to share that up till today, out of all the liquidity mining rewards that's meant to be distributed, only 32% has been claimed, and only 4% of Ply has been added to the circulating supply. But actually, more importantly, what we are proud to see is the concept of liquid lock tokens being adopted for other use cases. One example is the Aurora Futures, which was announced, I think, 2 weeks ago, where the Aurora team distributed Aurora tokens to their team members. So yes, so when it comes to designing tokenomics, it's crucial for us to try to find something that fits to your main product offerings and not just jump on the latest bandwagon or trend such as the VE token. So Aurigami, of course, we're committed to support all protocols to come onto Aurora. We're very excited to grow the ecosystem together. We recently launched our ecosystem liquidity pool, which can help to incentivize and attract more liquidity onto to our partners. As an early builder on Aurora, our dev team has went through a lot of contract interactions, and they know very well how to optimize certain contracts. So do reach out to us if you feel that you need help in that. We also offer customized borrowing arrangements for projects and also for treasury diversification purpose. And lastly, of course, we're always on the lookout to list new tokens and new assets on our platform. So if any of these things are of interest to you, please do reach out, and I'll be here the whole day. So if not, just DM me, and I'm sure we can arrange something. So that's all that I have to share today. Thank you very much.
Thank you so much. Thank you, Yang, for your presentation. So guys, maybe anyone has some questions? I think we have a lot of questions today. I have 3 near for person with the best question. Still no? It's not enough? It's right here, I'm not joking.
Maybe 30 is enough. 30 near.
Oh? You wanna take these 3 years for this best question. Okay, thank you so much for amazing presentation. Okay, just before we move on to our next speaker, I want to kindly ask our other speakers, Zvezdin Besarabov and Marcelo Fornet. Guys, if you are already here, please come up to our organization team, which is right behind the stage. Thank you so much. I just wanted to remind you that we have some activities, coffee upstairs. We have live translation, and also we have live broadcast in YouTube. So we have a link on Eventbrite. We have this link in our Twitter, so you can share it as well. And another fun activity, you can get 100 euro deposit to near swag shop. There is plenty of cool stuff. You need just to make a photo right in front of the boat, post it in Twitter, tag near UA, and we will announce results tomorrow. So it's a great chance to get some cool swag from near. And our final checks. By the way, tomorrow we will be open as well. There is a lot of great activities, speakers, office hours as well. We'll open our doors from 9 o'clock. We will have some coffee, breakfast, so join us. Okay, great. And I just wanted to remind you that we are right on the middle of our pitches today. We have 3 more speakers. And after that, we will move on to our best and favorite part. It's happy hours, so we will have some cocktails, networking, we have some drinks, we have a lot of great people here today. So let's proceed with our speakers. I'm happy to present you Jason Ma, Director of Business Development, Axelar, with a talk enabling next-gen interoperability in Aurora. Welcome.
Thanks for the intro. How's everyone doing today? I hope you're saving all the questions for me, because I'm very excited to be here. And what I'm talking about today is how do we enable next generation interoperability in the Aurora Near ecosystem. Okay. So as many of you guys have probably noticed, the world is really going cross-chain. We started with Bitcoin, Ethereum, to then various applications, to now where we have new chains from side chains to app chains every single day. And Aurora, as many of you have also noticed, has built a vibrant, diverse ecosystem, but it really requires interoperability beyond Ethereum. The question that I hear all the time is, how does Aurora increase new users and grow its community? Well, from Axelar's perspective, we believe you have to engage users from other blockchain ecosystems, create very simple user experiences to attract non-crypto native users, and finally attract and consolidate liquidity on Aurora. Of course, interoperability is not a new concept. There's many existing providers that's really tried to tackle this problem. But as you guys hear it time and time again, bridges are dangerous and carries massive security risks. But the question is why? Why are these interoperability solutions and bridges so dangerous? We did very detailed analysis of every single bridge hack and exploit, and our key takeaway is that they all had very centralized architecture and most oftentimes offered pairwise connections. Not to mention they also had very complex user experiences. So how is Axelar different? Axelar is the most secure cross-chain communication platform because we're the only one that's decentralized and permissionless. What does that really mean? Our architecture is modeled off of proof-of-stake blockchain built on Cosmos SDK, and we have our own diverse set of validators that secure the network. Why do we build it this way? Proof-of-stake blockchains has been around for a long time, and it's been battle-tested. We believe this security model is the best chance at staying safe from exploits. Some of the other cool things about Axelar is we built out our own set of APIs and SDKs that makes the integration process as simple as possible. You'll also obtain network effects when you work with Axelar because we offer many-to-many connectivity. Once we integrate a new blockchain or asset onto a network, anyone that's already plugged in our APIs will automatically be interoperable with these new networks. So as Axelar scale, you'll scale with us, therefore future-proofing your business and your protocol. Lastly, what we're really excited about is one-click experiences. With general message passing, you're now able to do multi-step contract calls across any of the chains connected on the Axelar network. Practically, as a developer, you can now build one-click applications with very complicated smart contract logic on the back end so that very new users can use your application easily, driving adoption for Aurora and for Web3. As I mentioned, Axelar has two main features. One is universal routing, and two, it's general message passing. Universal routing is when the new connections that we add automatically become interoperable with our previous product, and really general message passing is the ability to now call smart contracts from any chain. What we really also focused on and spent a lot of time building are developer services. Things like transaction state monitoring, gas services, transaction relay services, just really makes the developer experience super smooth. So things like gas services, you only have to pay gas on the source chain. You can pay extra gas with relay services so your transaction never gets stuck. We really believe these kind of developer services will make an awesome experience when you're building on Axelar. A little about the Axelar network itself. We went live on mainnet in Feb of this year, and already we processed over 1 billion in volume, over 200,000 transactions, and we currently support 15 blockchains. And the big news here is we're going to have support for Aurora next week. It's really also worth noting that it only takes us 10 minutes to onboard new EVM and IBC-based chains. So by the end of the year, we'll have support for every major blockchain, including sidechains like Avalanche subnets, Polygon supernets, and the new BNB sidechains. In terms of validators, we currently have 45 active validators that secure our network. But it's also worth noting, as our token goes live in September, anyone will be able to become a validator, and we believe this number will be substantially higher, between 100 to 200, like any mature Cosmos-based chain. And that will further decentralize the network. So because we don't have internet, I'm not going to be able to show you guys Axelar Scan, but I'll send the links out afterward. Axelar Scan is our block explorer that was actually built by our community, given that we're fully decentralized. On Axelar Scan, you can see everything from our active validator, the transaction volume, every transaction that's going through, really everything that's going on the network. And we really believe this kind of transparency creates further security for Axelar and our solution. In terms of use cases, who would benefit from Axelar and our general message passing? We really believe the ability to now call smart contract from any chain opens a whole new world of opportunities. Anything from cross-chain NFTs, cross-chain NFT marketplaces. Most DeFi applications will benefit from cross-chain messaging and consolidated liquidity. We believe wallets are very exciting because they have the potential to be the next Web3 super app, creating a unified experience where people don't have to leave the application. Think of your Revolut or your WeChat experience before Web3. And lastly, gaming. Any in-game asset NFTs can be moved from one chain to another, and then also interact with DeFi application, be collateralized as a loan perhaps. The sky is the limit, and we are really excited to work with Aurora and Near and the amazing builders here to develop the next generation of cross-chain applications. A little about our team. Our co-founders, Sergey and Yorgos, are highly technical. They were on the founding team of Algorand, and before that, they both have PhDs in cryptography and computer science at MIT and Waterloo, and they were actually assistant professors at that school. So, given their technical background, they really built a world-class technical team. We have over 20 engineers who spent the last 2 years developing our interoperability solution, and only in the last 6 months did we start adding non-technical hires like myself to help this go to market. I want to show you guys some concrete use cases that's come out of Axelar. So Osmosis, as some of you may know, is the largest DEX in the Cosmos ecosystem. In May of this year, they did a community vote where they were looking for a canonical bridging solution. They had well-known interoperability players like Nomad, Layer 0, Gravity Bridge, Wormhole submit proposals. And ultimately, this community then asked various questions and then took a vote. They voted Axelar to be canonical bridging solution. But what I really want to focus on is the impact in the first 30 days. Within the first 30 days, they had 30 million of organic TVL that came from bridged assets. We now had Ethereum BTC pools in the Cosmos ecosystem for the first time. USDC became the third largest asset, and now Cosmos was able to be compatible with EVM-based chains. That's just a taste on what interoperability can do for a previously enclosed ecosystem. Another example, Axelar, a grassroots project that came out of our grants program, is building a cross-chain NFT marketplace and a cross-chain NFT bridge. Within the 4 months of them building, they now have 50,000 Discord members, 40,000 active users, and they've minted something like almost 500,000 NFTs across all of the various different networks we're connected to. What some of the cool features that they're able to do is they're able to bridge NFTs while maintaining their metadata. And what that means is they can retain the collection verification as they move across chains. And in the future, they're going to have NFTs interact with other decentralized applications across these chains. This is just a taster of what you can build with Axelar. And we cannot be more excited to partner with Aurora and Near ecosystem to build the next future of cross-chain applications. The future is cross-chain, the future is Near. Thank you, everyone.
Thank you so much. Guys, I hope this time you will have some questions. I still have 3 Near for the best question. Just raise your hand if you have any. Yay, finally.
What is the best thing to spend 3 Near for? What is the best thing to spend 3 Near for?
Do you have any suggestions? Sorry, I'm not sure I understood. Free what? Free Near?
Yeah, just 3 Near.
Prize for the best question. We have a lot of questions today, so I've proposed just 3 Near for the best question.
I have no idea.
Okay, I'll buy some ice cream.
I think as we're in Paris, you can buy some glass of rosé at least. Glass of rosé wine. Thank you so much. Thank you for your presentation.
Thank you.
Before we move on, I kindly ask Zvezdin Besarabov, our next speaker, to... Oh, you're here, finally. I was thinking we were lost here. Great. So, we're about ready to proceed with our next speech. Just wanted to announce that tomorrow we will be open from 9 a.m. We will have some office hours with Ilya Polosukhin, co-founder of Near Protocol. We have a bunch of great speakers tomorrow, so join us. I know that we're sold out at Eventbrite, but you can just came, and we will try to find a spot for you. So,
thank you. I'll just leave it.
I think.
I'll take it later. Oh, it works. Amazing.
Yep. So we're ready to proceed. Our next speaker, Zvezdin Besarabov, CEO Audit.io. No?
There we go.
Yeah.
It works.
With a tag, know your customer that actually preserves user privacy. Welcome.
Ah, cool. Does this have a laser pointer? Okay, cool. All right. Well, thank you a lot for attending here, and thank you for sticking along until the end, almost the end of the talks. Don't worry, I'll try to not make it too complicated, and yeah. But nonetheless, we'll be talking about reputation here. We'll be talking about building trust in a decentralized economy. Why? Well, if we take a look at our normal economy right now, well, it's based on trust. Possibly too much trust, and that's why blockchain's decentralized. But we still need trust, right? The bank trusts you that you're going to pay back the loan once, and that's why they give you the loan. So trust is an important tool for us to have efficiency in our economy. But we don't have that in blockchains, right? Or at least not yet. Like, we don't trust each other. We don't know who is a real person, who is not. We don't know anything about the trustworthiness or reputation of people, right? And yeah, that doesn't work quite well. So the more traditional way that you can seed that trust is by doing KYC, know your customer verification, so verifying your users that they are legit. However, that's obviously the total black sheep in blockchains because, well, it's totally non-private, it's totally centralized, and it also takes a lot of time. So that's why, hence, nobody uses it, understandably so. Well, what we do at Outed is basically this, but native for the Web3. So that's fully privacy preserving, using zero-knowledge cryptography, fully decentralized, and also happening instantaneously. All right. So essentially what we're trying to do is we're trying to nail this sweet spot between, well, privacy, decentralization, and verifiability. So like how much we can prove about the user versus how much the user doesn't have to reveal to anyone else. Okay. And we believe we're one of the first players in the industry to be able to get more verifiability while still not compromising privacy. And something I should have mentioned at the start is that we just got a grant from Aurora, so we're bidding on Aurora. But yeah, and we would love to start operating and talking with the DeFi apps in the air to see what kind of verification they need. So can we put the video, please? So before I say how does that work, I'll just show you the demo. So we've got a mobile app, and this mobile app, you're going to take out your passport or your ID card. Most likely this ID card will have an NFC chip inside it. So so our mobile app, what it's going to do is it's just going to scan that ID document as an NFC card. There you go. So this is our mobile app. It is reading the ID document right now using NFC. In a couple seconds, it's going to show you your personal information, like your photo and everything else, whatever it could read from the ID document, and more things. Now, the next step is to actually generate a zero-knowledge proof that this document is valid, that you're over 18, that you're not on a sanctions list, or whatever else you need to prove about yourself in order to be able to use some sort of DApp, DeFi app, or service, or whatever. So let's say we're going to start generating the zero-knowledge proof. That usually takes some time, a few minutes. We're working on making it better, no worries. Once it's done, this is how a proof looks like. It's boring, I know, but it doesn't reveal your private information. That's the most important thing. So you can take this proof, you can send it to Uniswap, you can send it to whatever you want, whatever accepts this kind of proof. They can verify that you've been KYC'd, but it doesn't share, but nobody received your private information in the end. And that's basically what we're doing in a nutshell. So the next few slides will be all about me trying to explain how does it work if you guys are curious. And yeah, to just unpick the cryptography behind this in a human readable language. Okay. So first, let's talk about zero-knowledge proofs. And I'll try to make it quite simple as to what these things are and how do they look like. How do they allow you to prove something without showing it to anyone else? So let's say we got a very, very simple function that takes 3 numbers. And let's say that the task for me is to prove to you that I know that A times B equals C. And you know what's C, like C is public, but you don't know what's A and B. And I need to prove to you that I know that A times B equals C, but without showing you the actual A times B, right? So zero-knowledge proofs allow you to do this. So let's say we've got this function. I can say that A is private, B is private, C is public. And I can take this, I can put it into a magic black box called the zero-knowledge prover, and it's going to output a proof that looks like exactly what I showed you a couple moments ago. You send that proof to whoever wants to verify it, and now they know for sure that I know some A times B equals C, okay? And that's pretty cool. So let's take this concept, let's take it a step further, and let's apply some more cryptographic primitives to it. So let's say that now I'm trying to prove something more complicated. Let's say I know Jack. Jack is some blockchain user or whatever. So they've got a public key, they've got a private key, Jack. And I want to prove to you that I know a piece of information which has a signature by Jack, okay? But I don't want to show you that information, and I don't want to show you that signature. So what I'm going to do is, so I'm going to do this. So this is the data that I don't want to show you. This is the signature that I don't want to show you, and this is the public key of Jack, which you already know. And I can generate a zero knowledge proof that, well, that the data I have is actually signed by Jack without showing it to you. And yeah, it just works. And if we just take this a slightly step forward, that's basically how audit works in a nutshell. So let's say you've got a passport. This is data like your name, the social security number, everything else. Then you got a signature over that passport by the issuing country, let's say the US. And then you got a public key of the US. And so I can prove to you that I've got a passport which is legit, which is properly signed, which came from America, without showing you anything about it. So that's the base fundamental idea of how audit works. How does it, like, how do we get this signature document thing, whatever? Well, there's actually pretty big international standards of passports and identity documents which have an NFC chip. So you can actually digitally read your passport. Most of you guys, nearly all of you, should have this feature where you can read your passport and it's going to have like your passport information, but well, in a digital format. But it's also going to include a signature from the country which issued your passport, let's say US or whatever. And this is the key that actually allows us to generate proofs and do the whole privacy thing here. Is because we can make a ZK proof that you have a legit passport and that you're over 18, that your name is not on terrorist blacklist, and all kinds of other, let's say, questions without showing you anything about it. And yeah, and you can't really cheat. So let's just like zoom out a bit. How does this proof actually fit within the whole audit model here? Well, let's say we got Bob here. Bob wants to use any swap or some swap or whatever, and some swap wants Bob to prove that they're over 18. Okay, so Bob uses our app, and they scan their passport, and our app generates a very clever proof that proves that Bob is over 18, and other things, whatever the app wants. And then this proof gets sent to our smart contract on chain. It gets verified, and then the SumSwap, the app, gets notified that, hey, Jack now can use your app. So Jack now can use the app. And that's great. However, there's still a bigger question to answer here because, well, you can verify people, sure, zero knowledge, nobody knows anyone. But what if Bob ends up doing something very illegal? Like, you still probably need to know who they are so that you can, put them to justice, right? This is kind of the point of KYC. You can do that by having a centralized database, and you have this centralized KYC company which knows everyone, and you don't really know what kind of shady deals they do behind them and how they share your personal data. Or you can do it without it. So how does it work? Well, same thing, except passport comes through, and we actually take the user's personal data, like the national identifier, like social security number or whatever, and we split it into multiple different pieces, like separate pieces of information, and we send them to a network of multi-party computation nodes. Now, I'm not going to explain how MPC works in detail, but what you need to know is that every one of these nodes knows a piece of the user data, but they all need to come together in order to in order to actually combine and actually read the user data. And so just like in a blockchain, these are nodes, so you can give them a protocol to execute. And the protocol could be, you guys can't share the data to anyone, except if the police comes and asks for it, for example. So we can say this, we can say even more complicated rules, but the whole point is that you know exactly how your personal data is stored, and there is a very clear decentralized protocol on what needs to happen in order for your data to be read and accessed. For example, let's say the police needs to have a warrant or something very serious, so that you know that nobody else can steal your data in the background, or the KYC company can't do some deals or learn your address or anything else unless again, something with it all breaks down and they need to see who you are. But that's basically it. And now, if you take this just a step further, okay, and so now users, let's say, unique national identifiers is stored in the multi-party computation thing. Well, you can actually use this to generate a permanent global decentralized identifier for that user. So no matter which blockchain they use, like no matter like if they verify themselves using Audit on like Avalanche, on Polygon, on Aurora, Near, whatever, they could, if they go through this process, they always get exactly the same DID, exactly the same identifier. And that's pretty cool if you want to have more reliable reputation models, or like scoring or being able to prove that you own multiple accounts in multiple different blockchains. So yeah, I think this is the first, or even one of the first implementations of decentralized identifiers, which is fully Sybil resilient, which means Sybil resilient and blockchain agnostic, which means no matter which blockchain you use, you always have the same identity. So imagine, let's say, Uniswap or some dApp has DAOs, has token holders on multiple different blockchains, and they need to do a governance vote. And also imagine that they want to do a governance vote in a one vote, one human type democratic setting. So they can't really do it right now because, well, you don't really know who's a unique human. And if I prove that I'm a unique human on Ethereum, maybe I can also prove that I'm a different unique human on Avalanche, right? With this, you can't do it. So it unlocks quite a few different possibilities. So we're still exploring all the different use cases that this can have, in addition to normal KYC and all the regulatory ways in which this could be used. Decentralized project could also want to use this for, on their own initiative if they want to do age verification if they're selling, for example, adult content, if they want to verify or trust their borrowers more to give them, let's say, better loan terms, or if they want to verify that, if you're making an institutional pool, maybe you want to verify that something about the institutional investors in that pool, and democratic voting, citizenship, things like that. Or if you have an offending user, you want to blacklist them forever. Like if you really want to make sure they can't access your app again, or for a limited number of time because they did something bad and you don't want them to come back again, you can effectively blacklist them so that they can't make a second account. Another cool thing you can actually do is, if you want to collect user insights, you can do that in a way here too. For example, you can ask your users to prove that their age falls within a few boxes. Let's say, less than 18, 18 to 25, 25 to 40, whatever. And this way, users don't have to review their exact age, but you still get to collect the insights. So that's cool too. So with that said, there's still a few things we need to work out. Obviously, it's not all sunshine and rainbows. And in particular, the most obvious way that you can cheat the system is if you steal someone else's passport and then you verify yourself. Because right now we don't verify your face and anything like this because, well, this will require a centralized KYC company to do that, and that's kind of what we're trying to replace here. So there are a few other clever ideas to use extra data, extra source of information to make sure that you actually own the passport. For example, you could prove that you can log into a government tax account or some sort of online government service that has your name on it. And there's a way to do that while still revealing your while still protecting your privacy, and you don't show your name to anyone, et cetera, et cetera. But you can prove that you really are the person to a good extent. Another thing is that we only work with NFC-enabled identity documents, which is quite a few people, but not everyone. So yeah, for example, not everyone carries their passport with them, and your driver's license probably doesn't have an NFC chip inside it. So it probably won't work. So we're working on how to actually increase adoption and be able to support non-NFC IDs, which is actually a pretty decent technical challenge because they don't have signatures. So ZK proofs kind of don't work here. So yeah. And otherwise, yeah, the proof right now takes about 5 minutes. Could do it faster. That's it. So we recently got a grant from Aurora, but we've been building this for the past 5 months. We got a white paper. We have a team of 2 developers, in addition to Anna, my co-founder over there, and Alexi, our advisor over here, conveniently placed in the first row. And yeah, so we'll be publishing the test version ready in about 3 months. And for this, yeah, so that's me. Anna, Alexi. Yeah. So for this, we really want to know if you guys are curious to test it out. We're setting up all the initial pilots right now. So if you want to test out our KYC project, if you want to see if you want to like use this for your users, given the circumstances, definitely let us know. This is our email, or you can scan it. Or we also have a Telegram community, so definitely connect. And yeah, if you could. No, everything's good. So yeah, so now we're open to questions. If you guys can keep that slide, so people can scan the code. So then otherwise, yeah, if you got any questions, I'm open for it. Go for it.
Great. It's not zero questions Q&A session, finally.
So obviously stealing people's private data is a relatively lucrative thing to do.
Sorry, I didn't hear you.
So obviously stealing people's private data, like their sort of passport information, is a relatively lucrative thing to do. What disincentivizes the nodes from collaborating off-chain and recombining the data and then flogging it?
Right. Well, you could, like, the way we've been thinking about it is to use whatever other incentives like layer 1 blockchains use to make sure their validators aren't colluding. Like, they could be stakers, they could, yeah, I guess mostly stakers or other kinds of economic incentives for them to not collude.
So then how do you slash in the event of a data leak?
So, well, you could probably hold a governance vote and say, well, like, there's been a data leak somewhere, and that means that not only like 1 or 2 or 3 validators like collided, but like more than 60% of them collided. So that's that's unlikely, but if it happens, then you can probably just slash everyone or nearly everyone.
Okay.
Thank you for your question. Maybe any other questions?
KYC,
like...
DK, no?
Thank you so much. Thank you for your amazing
Thank you for the opportunity to talk. Okay, selfie time.
Sure.
There we go. Sorry, can you take us a photo? Can you take a photo of us? Thank you a lot.
Thank you. And we are ready to proceed. Our last presentation for today. I'm really excited to hear this already. We are making just final checks. And we will have final speech before the happy hours and networking that will be upstairs and here as well. So we have some drinks for you. Sure, we're just making our final checks and we will proceed. Don't forget to participate in our activities. You still can get some airdrops on your near wallet. We have quiz, we have puzzles. Actually, I already got some nears, and I think I have like late answer for the question what for the best to use 3 nears. I think it's just best to keep it because crypto winter it's not forever. Just keep it for crypto spring.
Okay, 1, 2, 3.
Yep.
You can hear
Great.
me.
And I'm happy to present you Marcelo Fornet, Protocol Team Lead at Aurora Labs, with a talk near to Aurora Interoperability, Crossing Without Bridges. Welcome.
Thank you all. Happy to be here. My name is Marcelo. I work with Aurora. Today I hope you are up for some code. I do want to show you one of the neat functionalities that I think have not been exploited that much still on Aurora. And it's the very fact that Aurora is a smart contract on Near. It means that it can interoperate easily with every other Near contract out there without needing any bridge. So today I just want to deploy a very, hopefully I have internet. I've seen the internet here is not great, but hopefully with my cell phone I can share it. To show you a contract, like how we can connect a contract on Near
to a contract on Aurora so they can talk between each other. I already made this very two simple and small smart contract. There is this status message contract on, oh sorry, not nodes, that's insane. This is smart contract on, well, this is a Solidity smart contract, but this is a smart contract that you can run in Aurora. It's like, it's a kind of short smart contract. It's a little bit lengthy just because of like public interface just to talk to it. But the main point is that you can call set Aurora address, and if you call this function, you will set a status message, like if it were your WhatsApp status or whatever. It's just a demo, not really important what it does. And then we will have this near contract that I'm calling near proxy. Also simple contract that if you call the set message, you notice that this is coded in Rust, no Solidity. So basically, just by calling this contract on near, you will be able to interact with the status message on Aurora, and you will be able to set your status, but as a near user rather than as an Aurora user. Okay, that's the whole point of it. So please, let's do it together, and then in the end, if you have any questions about how this is working, like I'll try to show you a bit of the code and also explore to make sure that we understand how this works. Let me quickly share the internet. I think I should have internet with my phone. Yes, I have. Okay, perfect. So, sorry. We are going to status message. Okay. So first we're going to do is I made in this Solidity contract, I made three functions that we will be using today. One is to deploy the contract, one is to check all status message for every contract out there, and one is to just add a status programmatically. No like interfaces, just CLI. Hopefully this will work for you. You will notice this is just hard hat. So interacting with Aurora, it's like seamlessly the same. You would do it as interacting with Ethereum. Nothing fancy to it. So let me go through it. Before I will be using near testnet and Aurora testnet just to avoid like interacting with mainnet and real tokens, just because it's a little bit easier here than setting up like, you know, secret keys and everything. So first thing is I will actually deploy near contract. You can, like, this is just building the contract. It's super fast because I already built it before coming here, but building the contract is just building a Rust contract into Wasm. And then deploying a contract in near testnet, it's also just calling, like you can use it with a CLI, and it's extremely simple. Okay, this seems to be working. On testnet, you get automatically assigned an account. We got this like def1658, whatever, with some tokens into it. And right now we deployed our contract and we just initialized it with this function. Okay, so I was doing this before because right now I can just like, I have this new account that I will be using to initialize my Aurora smart contract. So the whole point is that on Aurora, just to show you a little bit about the Aurora smart contract, how it will work, we have these two functions, set Aurora address status or set near account ID status. We can set a status as an Aurora user or as a near user. Okay, and as a near user, there is only one contract that can talk with my particular contract, and then every user can interact with my contract through this other contract. This is just how I designed this up. Doesn't need to be necessarily like this, but it makes it significantly easier. I will be sharing this code in GitHub afterwards. Okay, so if we just go here, we can, jar hard hat deploy, and I'm just deploying my contract. And there is something weird happening here that I'm specifying like near proxy account ID. This is the account on near that it's authorized to talk in behalf of near contracts. And here is a very neat part. On Aurora, we cannot, like, we don't have this concept of near account IDs, but we do have the concept of implicit address for near account IDs. So basically, for every account ID on near, there is an address on Aurora that will represent you every time you interact with Aurora as a near account. So that's really neat. In this case, for example, just to show you, this is my near account ID. It's a little bit cryptic in this case because it's a testnet address. You will usually have, like, I don't know, Marcelo.near. That's a near address. And then for every address, you will have an implicit account ID that it's derived deterministically, okay? So every time I will be talking with Aurora from this address here, I will be using this address in Aurora. So that's what I was specifying to initialize my contract. And right now, it's already deployed. So let me just hard code here, oh, not here, here, the address of the contract, so I can easily like list all the messages, all status messages. There is, of course, there is nothing there, but I can say, like, I can put some status here. I'm talking on behalf of my, of the same deployer, like I'm using a testnet account to deploy, to interact with the chain. This is a regular output. Use a successful transaction on Aurora network happening, so you should be able to get this hash function and go maybe to like testnet Aurora scan, and here in testnet Aurora scan, you will find this transaction. Like this actually took place on chain, and this was setting this was setting a status, right? So if I list all status right now, there should be at least one, okay? There is one status, and it's like, hello, EthCC. Okay? So right now I want to do the same thing, but from the near account, just to show how simple it is, and then what's happening under the hood. So from near account, first of all, I need to tell to the near contract, which is already created. I did, like in the first step, I deployed a near contract. I want to tell the near contract that this is the contract it should be interacting to inside the Aurora network. So for doing that, there is this function. Let me just quickly show it. Set status message address. There is just a function that will tell the near contract, okay, this is the contract on Aurora that you care about. You'll notice that there is a little bit of boilerplate here, but this is only about initialization. I'm just going through the whole process with all of you right now. So set status message address, and I will set the address that we care about, no 0x, use hexadecimal. And this is a real contract on near blockchain that's taking place right now. Like you can see the transaction also on Testnet Explorer, and I'm setting what's the address that I care about, okay? So now the cool part is that I'm setting a message, okay? So I'm just calling, I'm calling this contract. This is a near contract, okay? If I just call, oh, sorry, account. This is the contract I'm interacting to on near blockchain. It's this kind of cryptic contract. And I'm just calling it from an account of my own, which is called ide.testnet. So I will set a status message from ide.testnet, and hopefully it will be set, sorry, not this, set message. Okay, so I will be calling the account of the contract on near, and to setting my status on the Aurora smart contract, okay? So super cryptic stuff happening here. The fact is that Aurora will spit out a few bytes that we don't need to understand right now. The point is that this is a successful transaction that took place. And if we go to the transaction and see what happened, you will see that there is a transaction that was created by ide.testnet, which is my account. I was calling the account that I just deployed, which will be working as the proxy between IDE and the account on near. And then you see, okay, I'm setting this message, and then this contract here is making a call to Aurora contract. Okay, and it's calling Aurora contract with the right parameters to set a status message on behalf of IDE.testnet. So if we go back to the part of IDE.testnet and I call list messages, you will see here, okay, there are two status already set. The first one is the first we set with hello EthCC, and hopefully, okay, there is a second status. It's coming from IDE.testnet. This is an Aurora call. So this is right now me interacting with Aurora. And you see like a status of IDE.testnet, it's hello from nearchain. Okay, so just to show a little bit of what is happening here, it's a really simple function that I'm calling. There is a little bit under the hood that I'll show you, but basically the core part is that we are making a cross-contract call where we specify which contract we want to call, how many like how many ETH we want to pass it. Right now, no ETH at all, we don't care about it, it's just 0. And then we encode the arguments of what we want to do. We are using the same format that Ethereum is using because that's exactly what Aurora supports. It's an ABI encoding. And right now, I did all the encoding by myself, just by hand here. Okay, yes. This is how I'm coding, like I'm calling this function, set near account ID status. So I will not go deep into ABI, but we can discuss it later if you are interested. Here it's me just building by hand the arguments, and then the particular call, it's serialized in a very special way. That's why I wanted to create this repository and share it with people that it's actually interested in this kind of functionality. But while it's very particular, the format it's not hard at all. So we're making a near promise, and we're serializing the arguments that we're passing to this cross-contract call exactly as Aurora contract is expecting it. So we're calling the function call inside Aurora with these arguments. You serialize it as expected by Aurora, which is just serialized in Borsch format used by near. Okay, so that's pretty much what I wanted to show to you. Hopefully it's interesting, and well, if you have any questions, feel free to ask. You're welcome.
Okay, thank you so much, Marcelo, for your presentation. Guys, I'm not sure if you have some questions. Don't hesitate to ask it in person. Thank you for your presentation. I just wanted to thank you all our speakers today. Thank you very much for everyone who joined our broadcast at YouTube. You can find the link for tomorrow's speakers in the same playlist. Tomorrow we will have Web3 Communities Day. It will be a live broadcast. We open our doors at 9, starting with a coffee, some finger food. After that, you can have a nap on our beautiful terrace. And 1 p.m. we will start our office hours with Ilya Polosukhin, co-founder Near. At 2, we are starting office hours with Oliver Baker from Grants Program Manager, and also office hours with Alexander Hudzilin from Human Guild. And at 3 p.m. we will start with our speakers. We will have Ilya Polosukhin, co-founder of Near, Nadim Kabasiv, co-founder of Capsule Social, Kelly Pereira, Up Squared Creative App, Anton Weisbert, head of Near UA, Anton Giratko, co-founder and CEO of Sweetcoin, and Sasha Hudzilin, co-creator of Human Guild. After that, for sure, we will have also some happy hour. And today, I think we can move on to the terrace. We will have some drinks, some networking. Thank you very much, everyone, for joining us. See you tomorrow, and see you at the bar today for sure as well.